Okay, traders, the first thing I want to talk about is market structure, okay? Now, I'll try and keep this video short and sweet because the majority of people in here, you understand market structure. It's not the most difficult thing in the world, but when you filter down the time frames, it's important to understand what's actually happening from a 4-hour perspective to a 1 hour to a 30-minute. And understand, that sometimes it can be confusing when you drop down the time frames. Price action starts to look very differently. Okay, so in basic terms, on the 4-hour time frame, you'll see a higher high, a higher low, higher high, higher low, higher high, higher low, etc. And then when you get to the top of or the end of market cycle, you'll usually see some form of reversal pattern. Normally it look like a head and shoulders, or basically what it is a so you got the previous high followed by a low, and then a blow off top just to collect some liquidity or to close some more orders. Then you'll normally have a lower low created followed by a new lower high, and then price action will filter away as the profit comes out of whatever the move was. Now from here you generally go into a reaccumulation phase, and that can be a little bit difficult sometimes to understand where the market's going to go in the next phase of market cycle, because it can either start to come bearish or it can start to move upwards in the same pattern as we've got here. Now when you drop down the time frames to a 1 hour, these highs become less obvious. Okay, so you'll have maybe double tops followed by a drop off and then a spike back up. So you can look at this in terms of markets, cycle and phase 1 accumulation, phase 2 accumulation, phase 3, etc. When you drop down the time frames again, it becomes a little bit more difficult, because you start seeing what potentially is a reversal pattern when you're more than likely going to be just a reaccumulation phase on phase 1 or phase 2 or whatever phase the market cycle is in. Okay, so let's take a look at this on the 4-hour time frame first of all. Okay, now it's very easy to understand here that you've got a higher high or a high created by the market following this big drop off. Okay, now this one bearish candle here and this one, you can categorize that as your high. All right, this is your low. So here's your high, here's your low. This candle high here followed by this candle low, this accumulation phase, okay, which you'll often see on the 4-hour time frame, and we're going to learn about this in later videos, how to trade this breakout here. Okay, you've then got a new high followed by a new low, high high, high low, high high, high low, high high, high low, and then you've got your reversal pattern here, which again is a little bit difficult to work out on this 4-hour time frame, but that's where dropping down a time frame again to the 1 hour is going to help out. Okay, so if you remember the pattern that we have at the top here, and then you remember this pattern here, okay, so you can identify that the market has moved in the cycle phase and it's got to the top where it's exhausted, and we're now going to reaccumulate and potentially move into a new phase within the market, whether that will be bearish or whether it will be a continuation and a new bullish trend. That remains to be seen. We need to figure out where is phase 1 first. Okay, so again, you're back to the 1-hour time frame, and you'll notice that these higher highs and higher lows now all of a sudden become a lot more difficult to work out. So you've got your first push, reaccumulation. Now what you'll see here is that you've got what looks to be a new lower high. Okay, you need to check back to the 4-hour, because once you've got that high created, the 4-hour comes back, it pulls back, and it goes again, and it comes back, it comes again. When you look at the 1 hour, it looks, and it's so choppy, and there's lots of wicks everywhere, and it becomes a lot more difficult to project whether or not it's going to go bullish you may be looking a little bit to the left and see this, bearish move down and think, well, we're in cycle phase 2 or 3 or whatever. So in this instance, the best situation is to look for market cycle phase 1, and then we try and trade cycle phase 2. All right. So cycle phase 2, accumulation, 3, accumulation, 4, accumulation, and here's the last bit of the move. Okay, which to me this looks like this was created by news. So it could be CPI data. It's around about the 23rd, so it's not NFP. More than likely it's going to be CPI data or PM, whatever. When you identify this pattern here, okay, so you've got another blow off top, so you've got a high, a low, another high. Okay, so this is the blow off top where basically it's the last part of the phases that the banks move the market in. Blow off top. This will create liquidity above and liquidity below. You then got this new, well, this is actually a higher low, and then we failed to break above here before we come back down, and we actually now create a new low. Okay, so now you start maybe looking for shorts in the market. When you move down again to the 30-minute, this becomes even more choppy. Okay, so you're now looking at what this is going to confuse, even me some days if I'm not focused enough on the higher time frame. You've got your move back up, okay? You've got an accumulation phase, so we don't want to really be trading within this range, okay? If I draw this box across, once we've broken out here, we've got another push up in the market. Price then comes down to this accumulation phase, and it rejects the accumulation and starts moving back up. Okay, so there's a method that we can use either on the 1 hour or the 30-minute time frame in order to catch this move up in the market and then take our 2 hour before price comes back down. Now, if you do the same here for this accumulation, what you'll notice is when the price comes back down to the accumulation, it rejects. We don't want to be entering the trade here, right? Because this candle is very bearish. So what we want to look for is a rejection of the area before price moves up. Now, you may think to yourself, looking at the 1 hour again, we've missed the market here. We've missed our orders. There's high potential that if we get in now, we're not going to be very safe. But if you follow the wicks, and again, there'll be more tutorials on this in the coming videos, there's a pattern that you can recognize on higher time frames, which is basically a pattern that's forming on the lower time frames, like a head and shoulders pattern or a reversal pattern. So if you follow these wicks here, okay, you've got a wick to the low followed up by a liquidity grab here. All right, you'll notice that there's no bullshit fair value gap or anything around here. Price has rejected this area primarily because this is an accumulation phase. All right, so how does the market work? Well, price moves forward, up or down, then it goes into an accumulation, and then it moves again. All right, so when they accumulate these orders here, when price does eventually come back down to it, they will have limit orders here to protect the orders and the market cycle in terms of moving the market where they intend to. All right, so if you go back to this pattern here, because this is pretty much a morning star formation on the 1 hour time frame, you've got your low, another low, but we also have a bullish close, right? So this area here, this is now what we like to call support. So this is a new support formed just under these lows here. So your accumulation phase, we've got the liquidity grab, and then we've got the move up. Now, how do we enter this market and catch this move? Because we're trying to put together A plus setups, okay? So we'd have maybe on the 4 hour, we'd have a zone marked here, all right? And because we're bullish bias, we don't want to be looking for shorts. So we just sit on our hands until we see our setup, okay? Now, if this is our zone here, where we're looking to go long, so this may be a 4 hour zone, we can wait for these 2 hour candles to form. 2 hours gives us plenty of time to be able to make a decision as to what is going to happen in the market and where is the market going to move next. So what we need to look at is this level here, which is the break of this wick, okay? Now we don't need to put our stop loss down here because on the lower time frame, this wick is actually creating a new lower high. So we can place our stop loss down here and we can place a limit order here and we can look for our 2 hour trade at the top, because in terms of how the highs and the lows of the candles work out, okay, if this is a low, we wait for the wick to come down, all right? So we wait for the wick to form. Once the wick is formed, we then have a place for our stop loss. We put our limit order or buy stop order in this case here, and then we wait, and price would normally trigger us in and move towards our take profit, usually very quickly, because this is in essence a breakout strategy. If you've missed this order here, there's still no need to worry, because you've got another confirmation with this free candlestick formation. All right, so we've got the low, we've got the support formed, we've got a bullish candlestick and a bullish close. So what would you do now in this instance? Okay, well, we place our buy limit order above the candle, we wait for the wick to come down, we can have our stop loss here and I take profit at 2 hour just above. Okay, now if you want to consider the way that the candlesticks will actually form in this instance, okay, so you'll have a candle body that will look like this, okay? You'll have a wick to the top and you'll have a wick to the bottom. Okay, now the opening price of the candle will be the candle low in this instance, because we're looking for a bullish trend. All right, what you'll then have is a move to the downside, which creates the lower wick, and then a move up. And then what you'll normally find is that the opening price here, when you come back down, will act as support. Okay, so you've got the move down followed by a move up. Okay, so we're breaking above the opening price, and then once we've created the low, or the opening price will create its own low, price will normally move up, move down, move up. Let's move this out of the way. Move up again. So this will maybe create the high, move down, create the wick, and then come back down before closing here. Okay, but again, we'll go over this more in candle anatomy tutorials that are coming up later in the course. So the way that we would look to enter this, and how we would use the candle anatomy to move forward with let me just get this deleted. So if that candlestick is doing this, okay, and the previous candlestick done the same or similar, okay, what you notice on the higher time frames is these highs start to respect each other. Okay, and we'll take a quick look at the 4 hour, because once we've got our low, we've then got a new high, a new high, a new high. And again, once we've got our low, we've got a new high on the wick, a new high on the wick, a new high on the wick. So in this area here, and this area here, once the candle passes the wick, once this candle passes the wick, maybe not so much with this one, but what you'll also notice that the wicks of the low start getting respected all the way up, okay, until the market trend has stopped. So if you was to enter here, stop loss below here, okay, what we do on this candle open, we wait for the wick to come down. Okay, so you don't need to go down to the lower time frames, to the 1 minute, 5 minute, 15 minute. Wait maybe on the 4 hour if you like, if you quite a patient person, or you could do it on the 1 hour or the 30 minute. Those would be my three chosen time frames. I wouldn't use anything else. Okay, so once you've got your confirmation that we're going to go up, all right, so we've basically broken above this level here. We've got a 4 hour close. Wait for the wick to come down. And then once the wick, so the candle would basically look open like this, right? Come down, go past this opening price, and it will start to move up past the previous wick here. Okay, so this candle would open like that, it will go down, and then as it moves up, as it passes this wick, we're expecting it to create a new high and hopefully take our profit at 2R or wherever we set our take profit at. We're hoping to do that in just a few candles. So it's kind of a breakout strategy, but it's not, because we don't need to be looking at the lower time frames and be getting confused as to what's happening every day in the market. 1 minute it's going up, 1 minute it's going down, 1 minute it's going up, 1 minute's going down. If you just pay more attention to what's actually happening on the 4 hour, especially for day trading, the 4 hour it holds the key to, you know, a lot of what most people are doing wrong in this market. Because if you basically draw this zone, okay, so if you draw a zone here, this is the previous high, okay, so if we're going to go and continue bullish, we're going to break this high and we're going to continue up. Now in the opposite direction, if we're looking for price to reverse, we're not looking for sells anywhere here, right? Because we got a new low, new high. So in order for us to start looking for sales, price needs to come below this zone and then maybe back up and retest and push back down again. So in a bullish market on the 4 hour, as a day trader, you only want to be looking to go long, and vice versa. If it's short, you need to only be looking for shorts. Now you could, as I said, enter the market here. You'd wait for the wick to form. Okay, so the formation of the wick is key. If a candle ever opens without a wick to the downside or the upside, it tends to mean that, well, number one here in this instance, it means that it's just a follow through. It's coming up to clear the wick because the move is intended to go up here. But when we haven't got a wick, it kind of eliminates the place that we would like to put a stop loss. So we can enter on this breakout. So you mark the candle wick high here. Okay, so this is the previous high. And when we come down, we start to break above it. You can do this on the 1 hour, the 4 hour, 30 minute. It doesn't really make too much difference. I prefer to use the 4 hour and then filter down on the 1 hour and the 30 minute time frame. Wait for the wick to form. Put your limit order here, just a few pips above the high to make sure that your spreads are being covered. Stop loss below, and then the candle should follow through. If there's enough volume in the market, it should follow through to your take profit. So just to review the market structure, okay, you got 4 hour structure, high, 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 low, high, 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 low, high, 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 low, followed by a reversal, okay, which looks something like this on a 1 hour. And then as you drop down the time frames to the 30 minute and the 15 minute, it gets a lot more choppy. I'd advise not going anywhere near anything lower than the 15 minute as a day trader, unless you want to be a scalper. There's a very big difference between being a scalper and being a day trader, because ultimately as a scalper you want to be getting in and out within 10-12 pips with 5 pip stop losses. As a day trader, you can increase the size and the position of your order stop loss to take profit, because the market in general is going to move around about 100 pips per pair per day. So we're only looking for about 20-25 pips most of the time. There's no need to go all the way down to the 1 minute time frame and get, you know, really confused. So 4 hour, 1 hour, 15-30 minute, and then we've got our actual price action on the screen, what you're going to be looking at. 4 hour, high low, high low, high low, and then again the 1 hour, it just looks a lot more choppy, okay, because it's actually now 4 candles to create one 4 hour candle. And then again we're looking at even more chop on the 30 minute, okay, and you're looking at 8 candles now which form one 4 hour candle. So if you've got any questions on this video, hit me up in the chat room. As always, I'm always around to help. Hope you enjoyed this video, and I'll see you in the next one.